Good evening. Welcome everyone to our Learn with Stanley webinar number 43. Thank you so much for taking the time and joining me tonight. And I have something amazing planned out for you guys. Today we're gonna talk more about the company Nvidia, currently the most valuable company in the world. We're gonna look into its history, why Nvidia was founded, what happened, how does it grow to become what it is today, and then, of course, looking at the future, what could happen in the future for Nvidia, and are we already too late to start investing in a stock like Nvidia? Thank you once again for joining me, and I can see that we have more and more people trickling in. Caroline, blessed day. Thank you so much. Welcome. And I can see some familiar faces as well. Do let me know, where are you calling in from? Have you had your dinner? And let's get started. All right. Today's presentation is going to be about what exactly is NVIDIA. And we're going to view it from a point of view of someone that is just starting investing, trying to understand how that we can look into a company like Nvidia, maybe not a company that most retail investors like ourselves would be familiar with. How do we make sense of what exactly does Nvidia do? As usual, before we begin, this is a standard disclaimer that do understand that I do work for IFA's Global Market here in Malaysia, and they. But today, the presentation is based on my own research, and please just treat it as an educational um, seminar, and please does not take this as investment advice. And if you're new to our webinar series, do know that I tend to do this every 2 weeks. I have been doing it every 2 weeks without fail for the past, I think, 1.5 years. And I'm going to try to ramp up the series as well, maybe trying to do it once a week in the future. But every week at least, if you are within our mailing list, you will be able to get updates on the latest webinar or the latest report or newsletter that I put out through your email. And most of the time, I'm going to talk about some interesting stocks that I've been researching on, or funds or ETF, or even just talking about the general investing sentiment and the market update as well. So if you have been following me for some time now, you might know that I have been sharing content online for quite a number of years now, and that really started when I co-wrote a book called Value Investing in Asia with a dear friend of mine, and that book has continued to inspire us to continue to put out good content and interesting investment content to educate everyone that is interested to learn more about investing, especially fundamental investing. And I myself now is a wealth advisor with iFA's Global Market. And if you are new to iFAS is actually a wealth platform that allows you to gain access to almost all asset class that you need to build a diversified portfolio, right? From building up your unit trust, investment bonds. We have something called managed portfolio, where it is a funds of funds portfolio managed by our in-house team. And of course, we have many clients that use it for cash management on our money market fund across multiple currency, and also a brokerage account that give you access to stocks and ETF as well. And that includes all the major markets from US, China, Hong Kong, Malaysia, Singapore, and we recently just added the London exchange as well. But for me, when I'm talking about investing, I try to focus more on this key philosophy that I've built up over the past almost 2 decades now that I've been investing. And I try to focus more on long term trends that I can identify or I can be more optimistic about. Uh, and my view is that if we are able to find such markets or opportunity in through the stock market, uh, basically these instruments or these asset classes will do well over the long term. And that means that our job will be switched into trying to manage the risk. And how can we make sure that whatever we select or whatever that we are investing in is of the highest quality so that we won't fall into the trap of losing our capital permanently. And instead of trying to always predict what is the next trend, what is the things that what will the market will do in the next month or next week, I try to focus more on the long term. That means that I don't chase under after many viral trends out there, and it's okay to be not following the market. Sometimes it can be a very lonely and hard path, but as long as we are able to keep calm during market panics period, or not get too greedy during market bull market, I'm I believe that I can build something called an everlasting portfolio. So it's a strategy that can stand the test of time. It doesn't require too much monitoring and energy from us to constantly look into it. That truly allows us to build, as the definition called, passive income. And this is my own portfolio that I've been tracking since the past 17, 18 years now. And you can see that uh, along the way, it was never a smooth ride. In fact, almost every 3 or 4 years, you see that my portfolio will suffer a pretty drastic drop. The last one being in 2002. But also, staying with the focus on long term investing and looking at long term trends, I have to say that so far the strategy has worked well for me, and it is something that I still continue to believe strongly till today. And I do feel that this could be a very, very vital and simple strategy that most investors would benefit from. And this is something that I try to advocate for and also try to educate a lot of my clients on as well. So if this is something new to you, or you have tried out different strategy and you feel that it's not working out for you and you're just seeking out different approach and trying to understand what you could do to your portfolio in the current moment, I do have a one-on-one consultation that I can give out to new prospect or new clients. So if you're interested to speak to me on a one-on-one basis, you can always reach out to me from my contact will be on learnwithstanley.com, or just scan this QR code and fill up a Google form that I have prepared, and I'll reach out to you at the soonest that I can. So going back to our key topic for today, maybe we do a quick survey, right? If you are on your phone or on a computer, just open up the chat icon. If you're on a computer, it will be on the menu bar, and you can see a chat box. Or if you're on your phone or iPad, just click on the three dots and then click on chat. I just want to know, has any one of you invested in Nvidia or is actively looking to invest in Nvidia? Maybe you can also share a little bit on your view. If you have invested, how's it going? If you have not invested, what's stopping you? But when we talk about the entire AI boom currently that has been going on for the past few years, until today, different sources give me different numbers, but what I can find is about 75% to 95% of all AI computing today is actually powered by Nvidia chips. So at the back end, the infrastructure that's powering the entire industry more or less is powered by Nvidia chip. So they almost have a complete monopoly on all the things that is being developed through ChatGPT, through Nano Banana, to Gemini with Notebook LM and all everything that we are experiencing now in Adobe in different uh, video editing software or animation generation software. Behind all that is powered by Nvidia, and you can see that over the past 5 years alone, the stock price has rallied close to 1,300%, which is 13 times. The no 1,300%, yeah, about 13 times just in the past 5 years. But going back to when it first started IPO at the peak of the dot com bubble, you can see that 1999 it IPO'd, and yet today you can't even see the dot com bubble from its stock chart. Nvidia has actually grown about 4,459 times its initial IPO price. So, what makes this company so amazing? We're going to talk a little bit about the current status of Nvidia. We're going to look to the past of the history of the company, what started it all, the people behind it, and what is the key magical turning point that makes it into the largest company. And then finally, we're going to end with a session that we're going to look at its prospect and also what I think of when it comes to its valuation and how you can consider if this is the kind of investment that you want in your portfolio. Thank you very much. I saw some of you guys reply, Caroline, as congratulations that you have invested in Nvidia for the past few years. And Yo saying that he has sold after the President Trump won. and and Vivian, I hope I pronounce your name correctly, that you have invested as well. Congratulations to you guys. So I have a picture of a shovel and a pick. And I think this is the closest that we can, as a closest analogy that we can use to describe NVIDIA. Basically, there is an AI boom right now, and equivalent to a gold rush boom. Uh, Everybody is rushing to create the next big AI company. Just like everyone in the past during the gold rush is trying very hard to mine for the next big chunk of gold. But in the end, the company that benefits more surely, regardless of whether they find gold or not, is the guys that sell the equipment, the guys that sell the pick and the shovel and the wheelbarrow. And that's basically NVIDIA. NVIDIA is the infrastructure behind all this. In particular, their GPU, their graphic processing unit. And that has been the key products that has been pushing NVIDIA up to today and to the scale that they have today. And the people behind it, right at the beginning, in the 1990s, the company was actually founded by these three guys. Jensen Huang, of course, if you know about NVIDIA, you will know about him. But the other two co-founders are Chris McLachowski and Curtis Prim. And the three of them are basically engineers in the Silicon Valleys back in the 90s. Jensen Huang himself has worked in AMD before. He has worked in LSI Logic before. But the three of them met during the time in Sun Microsystem. And of course, the main guy pushing forward the idea of creating a company is Jensen. And at the time, they could see that the PC market is growing, and the PC is slowly evolving to become the key entertainment platform for the next generation. That's basically my generation when I grew up. So our parents' generation maybe is the TV that become the main entertainment platform. Before that, our grandparents will be the radio, and then during my era, the PC has started to be evolving to become the main key uh, tech platform that we all use, and they see that there's a need for the graphic processing power to be much better and will become the heart of computing. So that's when they have the idea of creating something called accelerated graphic cards. Um, and together, the three of them has pooled some of their money together. Uh, Reportedly, is only around $50,000 of their own money at that time. And but soon they are able to attract many venture capitalists to start investing in them. After all, by the time when they left their job, they are all quite senior position and quite well known in the Silicon Valley. So within 1994, just a year, Nvidia was able to secure about 20 million funding from none other than Sequoia Capital. And from there, they really try to invent the product because at the time the product doesn't exist. So they were trying to create the product that would um, make computers better at generating graphics. Some of the first product that they created is what they call an accelerator card. At the time, at the beginning, they really struggled to find a market. They have some success, especially when games started coming up. The main key games that catapult them uh, into the eyes of the consumer is a game called Quake. It's basically a first shooter game, one of the first kind that is using that needs accelerator card to play, and it's a mind blowing game especially during that time. It continued to become a key success and a key driver for the development inside Nvidia. But it was not until 1999 when they launched something called the GeForce 256 that is considered the world's first GPU, the first graphic processing unit. So if you, maybe at this time, I would not try to explain too much on the technical side of things because I myself is not a technical person, and I'll do a terrible job at it. Uh, and I also feel that in a sense, as analyst or as a consumer investor into such a company, uh, it's key for us to understand the main ideas, but the details, I would say that is not extremely important. We just need to know what does it do. But if you want to know the difference between, say, in the PC, what's the job of a CPU, which is made by Intel at the time, compared to a unit like GPU that is made from Nvidia, there is actually a very good YouTube video by that is explained by Mythbusters. I remember growing up, I enjoy watching the show Mythbusters, where they'll try to break a lot of the Hollywood myth out there, and they have actually do a visualization exercise that building a machine that shows you exactly the difference between a CPU and a GPU. I encourage you to search it out and have a look, and you get a better idea why GPU is so much superior when it comes to computing power and performing, especially a graphic task. So in 1999, NVIDIA finally was able to create and launch GeForce graphic cards, and it really revolutionized the computer world. And from there, they were able to build a business. So previously, from 1993 up to 1999, although they are creating new products, but they were really struggling. And at that time, there were thousands of companies doing the same thing, trying to be the first to create and invent the next um, graphic accelerator. So once they have this success, it catapulted them into IPO as well on the same year, 1999, at close to the peak of the dot-com boom. And then luckily, from there, they were able to raise enough money to last them through the dot com bust era. And for a long time, gaming has been their bread and butter. So they were building graphic cards for the computers. Uh, they were always considered a sideshow to juggernauts like Intel, and they focus very, very much on gaming. But they soon realized because the they realized that their GPUs are being used by other people other than gamers and for using different purposes as well. And most particularly, some of the key things that they're starting to see that people are using it for in the academic world, in machine learning, and that led them to explore that GPU can can do more things compared to just provide the graphics for gamings. And they lean into that. They created a development stack for developers to uh, adjust the GPU so that they can make it into more multi-purpose. And we see that, you know, more and more people, especially after the financial crisis, we see a much increase in demand, starting from most obvious like Bitcoin mining, more into the scientific world, into the machine learning world, and then on cloud computing as well. And all these led to, just on the last 5 years alone, you can see this is the revenue and the operating profit of Nvidia. And the revenue alone for the past 5 years, you can see that it had grown from just 10 billion, although 10 billion is a lot of money, but to the current about 130 billion a year. And that's a CAGR, meaning annual growth rate of about 67% for this company. And of course, the profit is actually accelerating at a much, much higher pace, close to, I think the last time I calculated, maybe about close to 90 plus percent for their operating profit. And so when you see the improvement in their financials and the real demand coming from their products, and when you look back at their stock price, uh, which has grown about 91% a year since the past 4 or 5 years, in a sense, it has more or less been growing quite in line with its performance. So you couldn't really say that this company is in a bubble, and and the growth from the stock price is not warranted. This is one of few example where the stock is rallying very, very drastically, but is actually backed by their strong fundamentals. And that growth is not decelerating at all. You can see that just this is just on the last few quarters in FY24, where every quarter they are making maybe about 18, they are generating about 18 billion. And fast forward just about 1, 2, 3, 4, 5, 6, 7, 8 quarters, uh, they're generating about 46 billion a quarter. A quarter, yeah. And much of it is coming from data center, which is going into AI infrastructure. So you can see that in the past, the gaming has been their core bread and butter and the main bulk of their revenue. But you can just see over the past few years how much the demand from AI infrastructure has really driven the company to a different stratosphere. And with all this money, what is Nvidia actually doing? So, uh, of course, it is reinvesting and increasing their product range and just iterating and making sure that they continue to be making the best product that everybody wants. But they have also been increasing their shareholder returns. to shareholders as well through dividends and also through share buybacks. So this has been the increase in share buybacks over the past few years. They only started, I think, in 2023, but has been increasing drastically as well. So a big part of their profit actually gone back to rewarding shareholders as well. So why exactly is Nvidia so special and all the AI companies wanted to use their product? Of course, they have the the best chip at the moment, but that doesn't mean that other competitors couldn't catch up in the future. But what one key moat that the company has is that they have an entire ecosystem that is helping developers and helping uh, companies to make sure that they can program whatever that they want the GPU to do for them. So on all three levels, from working with developers to make sure that they have the largest pool of add-ons and software to protect their ecosystem, from building the architecture, which is the physical chips, and having the application software through CUDA that allows company to customize what they want the chips to do. So all this kinds of created an Apple effect for Nvidia. So when we say that Apple has a water garden, when you start using Apple product, it's very hard for you to get out of the ecosystem. Similarly, on the enterprise level, where Nvidia's customers, when they start using Nvidia's chip, it's very, very hard for them to say that they want to switch everything out because their code is been written for the chipset, has been written and with the help of their software and with the development ecosystem within. So it's very hard for them to say that they want to switch everything out. So which is also the key that why until today, Nvidia is still one of the fastest growing stocks out there. And the key idea is that maybe this AI revolution, evolution or revolution, is just at the beginning. And we're just seeing the surface of it. After all, we have not really seen uh, like very, very drastic application of AI other than helping us on a lot of our tasks, but we have not yet seen something extremely revolutionary that AI is gonna completely, how do I say, uh, completely revamp everything that we do, right? And that could happen, and especially on if you listen to people like Sam Altman from OpenAI, where he talk about uh, when the time we reach AGI, where the computer can think for itself, what's going to happen, what could happen, and you get a sense that uh, maybe the AI creation, although it has been developing for decades now, maybe we're just scratching the beginning of it. And at the center of it all is NVIDIA. And plus, we can also see that NVIDIA starting out as just a graphics company, then become a gaming company, and then they happen to be able to be one of the key drivers in autonomous driving, in robotics, in scientific discovery, in Bitcoin mining, and things like that. Maybe this company has the company culture that to allow it to be able to spot the next big thing. And after this wave, there's going to be the next big thing, and they will be able to be well positioned to take advantage of it. Maybe it's just within their company culture that they are at the forefront of scientific discovery, right? But there's also, every time we look at something on a bull case, we should always look at the possible risk as well, which is what is the bear case, what is the worst case scenario, what could go wrong. Number one is of course its valuation. The stock price has already risen many, many thousands of percent. Uh, and it is not the cheapest stock in the world. And that could be something that we have to be consider. Plus, Nvidia has not always been a key leader in making GPUs, right? They have uh, been making graphic cards for a long time, but for a long period of their history, they're actually competing with AMD quite close neck to neck. This means that right now they're leading, yes, but there's no telling that their competitor cannot catch up. And not only Nvidia, AMD is trying very hard to catch up. Within all the big techs, the hyperscalers like Google, like Amazon, they in some instance they are also trying to create their own chips. Although now, very much so on certain tasks as only, definitely in no way near to replace Nvidia, but they could step by step try to make more and more function in-house so that they can reduce their reliance on Nvidia as well. Next is also things that we can have to consider, such as the geopolitical risks. Although Nvidia is an American company designing the chips in America, much of its manufacturing is still done with TSMC, which is based in Taiwan and at a very, very politically risky area, and a company that is at the core of the tension between US and China. So all this means that Nvidia is not a company without risk. And this is a valuation site that I took from our IFAS platform. You can see that if we just compare some of its valuation, you can see that the company currently trades at about 52 times PE, which is considered pretty high PE. And if just price to sales at 27 times, very extremely high. Other companies within the industry, although I wouldn't say they are comparable, but you can see that they trade at a wide range of valuation compared to as well their growth rate uh, as well. So this means that Nvidia is at risk of a revaluation of its stock if the growth hits some roadblock or tapers down from such amazing growth rate in the past few years. This means that many investors is actually expecting, number one, the company continue to grow for many years to come, but also even after if you say the AI infrastructure has been built up, say we reach a point of saturation that we have enough computing power for artificial intelligence use case, that Nvidia will continue to be able to sustain such a revenue level, right? Even when we reach saturation point. That might be a little bit tall order, but first of all, we no one knows how big the market really can become. So there's a lot of guesswork when it comes to assuming this scenario. So you can see that there's a lot of uncertainty with this company and with this stock, and something that you have to consider if you're planning to invest in it. And in recent news as well, Nvidia has been starting to turn around and be a serial investors. Has been going around with his deep pocket and extremely strong share price to start shopping around. Not unlike someone who has gotten a windfall and strike the lottery. So Nvidia has announced that it will invest 5 billion into Intel. Intel has been struggling for many years now, and this has been seen as a pretty good indication that Intel could start to see some recovery. But bear in mind, 5 billion is a it in today's is actually a very, very, very small amount for Nvidia. It's almost a spare change for Nvidia. And I think their idea is that they could work on integrating their CPU and GPU for better integration in the future for computers. They could also look into improving their supply chain, especially on the foundry side for Intel. Maybe they could offload some of the workload from TSMC to Intel. Maybe, of course, not the high end ones, but some of the lower end ones at the moment, since TSMC has been at peak capacity and not being able to grow as fast as Nvidia wanted it to be. And also, Intel being a US company as well, has some uh, geopolitical safety net for them in the longer term. But more interesting news is actually coming from yesterday that Nvidia is planning to invest up to $100 billion in OpenAI to help them build up their data centers. When I look through this deal, it seems to me, it seems to me that it's not really an investment, but rather it is a financing deal, basically. That OpenAI need to build out its own data center, and Nvidia has decided that it would help fund this expansion, provided OpenAI turn around and buy Nvidia chips for all its data center as well. So basically, OpenAI need to build up a 10 gigawatt um, data center, and that is roughly about 5 million graphic cards that Nvidia can sell. And Nvidia is going to commit 10 billion per gigawatt. So as they build up one per gigawatt, Nvidia is going to give them 10, 10 billion to invest into the company. So at the end of it, what's everyone going to get? So OpenAI is going to get the financing that it can buy the chip, and Nvidia going to get some OpenAI stocks and more sales that it can sell its GPU. In a way, OpenAI is basically paying its chip using its stock, right? It's giving Nvidia its stocks in exchange for chips. Interesting, but I'll talk a little bit about what could go wrong on this. Oops. So this is all that is happening in Nvidia, and you can see that there's no sure answer of whether you should or shouldn't invest in Nvidia. There is pro, there is cons, and there is definitely opportunity, but there's also risk. So to make this decision, I would see that at the end of the day, you have to see what kind of investors you are and whether you can stomach this risk. So if you are someone that is willing to take more risks and a growth investor in mind that doesn't, you know, understand a little bit more about the landscape and the addressable market that could potentially be for Nvidia, and you trust Nvidia's vision, then even until today, I think Nvidia valuation is not too excessive. But if you're someone who is more cautious, more conservative, you're someone which I call a value investor that focus a lot on the valuation side of things, or you need a little bit of income and less volatility in your stock, maybe buying such a stock would not allow you to sleep very, very soundly at night, right? And so it goes back to, again, your philosophy. How do you want to build your portfolio? And how do you want to size your investment? I would say that, you know, a key part, maybe I'll jump forward a little bit. A key part of how you can think of it is in terms of asset allocation. So this is something that I do for my clients as well. That when I look at their portfolio or when I look at where they are investing or where they're saving my money in, I first create something like this. This could be an ideal allocation for them that to create their portfolio, maybe their investment portfolio would end up having exposure to these key markets. And then from there, we can select. For me, I prefer to use ETF. That we can use ETF to build up the key part of their exposure to give them the portfolio that they want. And then we have something called the tactical side. You can see 20% or it can be 10%. And that could be something that is more opportunistic. And then if you want to buy individual stocks, if you want to buy certain particular sector or cryptocurrency ETF, you could place them into this portion. And if you size them in a way that it could still give you sufficient upside potential, but if something happened to this part, it will not be the end of the world for your portfolio. At the end of the day, again, it's really about risk management. And a key part for us to think about is actually when we're investing, the input, the output can only be as good as the input. What I mean is, if you're still working and you still have excess savings coming to you every single day, just look at the brown line and the blue line for a minute. If you're able to have the discipline to continuously save every single month consistently and just buy into the market or create your portfolio, regardless of whether it is market rally or in the buy market. If you continue to do it for a long enough period of time, you will realize that your portfolio will slowly, uh, the value of your portfolio will slowly grow more and more the longer you invest compared to your costs. This is based on real data over the past 10 years, just how much your portfolio could become if you are disciplined enough to do this exercise from compared to your costs and the value of your portfolio today, even after multiple crash that the stock market has endured. So the key part of it, uh, from what I do with my clients, number one is to build up such allocation with them, but also acting as like a personal trainer for them in terms of their wealth to make sure they stay on track, make sure that if they are committed to doing something like this, to have a regular saving plan, that I'm there to guide them and encourage them along the way. Because the longer that we invest will be the time that it will reach a time where we can truly see the power of compounding, and you can really enjoy the fruits of your labor the longer you invest in the stock market. So again, thank you very much. If you want to speak with me one-on-one on some of the things that we have spoken about today, or uh, thinking about you think you're having some thoughts about your own financial planning and your own investment portfolio, or you just want to open a brokerage account with us, do reach out to me. You can also go to my website learnwithstanley.com and just scroll down, and if you see this free financial health check button, you can click on it and fill up the Google form, and I'll reach out to you ASAP. Thank you very much. Again, I'm from iFast Global Markets, and if you just want to catch up with me on some of the content that I will put out on social media, you can always follow me on either LinkedIn, Facebook, or YouTube. There will be place. These will be the three places that I am more active on. Before we go to Q&A, I'd love to hear from you what question you might have, either on Nvidia or on other stocks or ETF that you're looking at, on investing in general. Let's have a Q&A today. Pull up your chat box again. Let me know your question. Uh, Before I go into that, just our quick spin-off segment. Today, I just spent about 2 hours listening and uh, re-listening to this very interesting podcast, Diary of the CEO. I have always been listening to it. Stephen Bartlett was just recently in KL and also in Singapore. Very, very unfortunate I was not able to attend the his seminar. But today he put out this new podcast on heart health, and I have been researching on health more and more as I become older and older, and especially since COVID period, I have some of the key things that I have really been focusing on researching more on is our physical health and our mental health, and this is one of the very very interesting podcasts that I feel that would benefit everybody because after all, what is wealth without health? And it touch on things like how our food can impact us very, very drastically. And a lot of things that we assume are healthy are actually very, very toxic for us. So check it out. I hope you enjoy. And let's go to the Q&A. I'll end by a quote that I always try to end. And today the quote is from Epictetus, uh, one of my favorite Stoic philosopher. Wealth consists not in having great possession, but in having fewer ones. So as we ponder on that, let's go to some of the Q&A if you have. Let me pull up the chat box. Okay, Yo has a question on which ETF would you recommend if I look at exposure in Hong Kong stocks and China stocks? There's quite a few out there. If you're focusing more on the tech sector of China, of course, if you want to invest in the US market, there is the um, Investco CQQQ that invests in tech stocks. You can look at the Hong Kong market, which is something that I would prefer. Stock like 3067 or 9067, basically same thing, which is Hang Seng Tech Index. Or you can buy tracker funds on Hang Seng Tech Index as well. I would say that it's good if you pull up Hong Kong Stock Exchange website and then just search through their list, focus on some of the bigger ones that they have. They would have uh, a wide range for both your Hong Kong stocks, your China stocks, Hong Kong tech stocks. They have A50 stocks that you if you prefer all China stocks, um, and also something on REITs as well. So do check that out. But I personally is mainly invested in the iShare Hang Seng Tech Index because at the end of the day, I feel that the tech company would have higher potential to grow in a sustainable manner over the long term. Whereas I'm not that optimistic on long term optimistic about many of the Chinese industry. Let's just put it as such. All right. And if you guys have any other question, you can also reach out to me on my website, learnwithstanley.com. If not, thank you so much for staying with me for the past hour. I really enjoy always putting out all these webinars for you guys. I hope it has been valuable for you guys as well. If you have a certain topic that you want me to touch on as well, feel free to reach out and let me know. Till then, my name is Stanley. Till we meet again, invest safely, guys. Good night.